Alrighty, sweet. Well, we had a few people leave us, so we'll have to make the conversation interesting enough such that a few join back. So, as noted, Ray, our intended moderator, is running a few minutes late. He probably will tap me in, and I know he has a great background and could ask a lot of specific questions. But I also am lucky enough to know a lot of these guys, well enough, and I'm super excited, so we can kick off with a few new questions, kind of, out of the side of things to get started. So as noted, value versus valuation, creating a price out of thin air. I personally, have been in the space about 5 years, and the biggest thing I've realized is like on TGE, I think that the previous question is like what tokens are valuable, but upon TGE, kind of how does a token even get valued, right? And before we get there, obviously we'll get into introductions from each of our speakers. I think many of you probably know them at all, to some extent. But at a high level, I'm very excited to hear from them, specifically how is a token, priced at TGE. So without further ado, would love to get into introductions and then take it from there.
Thanks a lot, Cooper. Hey guys, thanks for all coming. I'm Will. I lead business development at Caladan. We are a crypto-native quantitative trading firm that also focuses on delivering financial solutions to long-term oriented builders and investors.
Guys, I'm Jordi. Apparently, I'm a KOL, I've been informed, and a podcast host. My podcast is Steady Lads. And let's chat.
Nice to meet you. I'm Mattia. I'm part of the DeFi team at IMC, which is a traditional option market maker, but has a branch that does crypto stuff in Zug.
You're a KOL now? Really?
I've been told by Hasib that I'm a KOL, so I guess it's true.
Actually works. So I'm David from Keyrock. Being a KOL is definitely not in my profile. Whenever I go to any crypto party, I don't get in easily. Even though I do like billions of dollars of volume, they still don't give a fuck. Like some dude on Twitter can get easier in any party than me.
I love it. Well, thank you for those introductions. As noted, for those listening, we have 4 of the most talented kind of teams on the market making or trading or any side of it with us today. We're super lucky to have who we have up here, whether they're a trader, market maker, or KOL. So with that being the case, I want to get into, we're back in the bull market. The memes are going crazy. Every single token is trying to TGE right now. We have a ton of projects coming. The biggest thing, right, is launching on Binance. Interestingly, we've seen pre-launch futures come out on many of these exchanges. But, a lot of the hype, right, we've seen hyperliquid points, a lot of buzz around that. I want to talk in general, and we'll let you guys take it, from there of like, how does a token come out at an initial price? And how do you advise teams specifically on what, potential price that is? Or, do they come out of thin air? We'll kind of kick it over to anybody to start.
I mean, I guess I do enough of these that what I've realized is it's supply and demand, and it doesn't matter what they want to set it at. It's eventually going to, within the first week or so, going to get to that equilibrium. It really doesn't matter. If they launch it too high, it's just going to dribble down. If they launch it very fairly, it's going to go up. But even on day one, market maker, for example, can barely have enough tokens to just do what they need to do. They're not going to determine the price. In terms of advice for them, what to be realistic about, it's more about setting psychological expectations. During a quiet market, the exchanges know, they can see from their data, no one's depositing money, there's no new signups going on. In that type of environment, which was literally just a month ago, you're going to have to say your expectations low and then hope for one of these like fireworks where the right kind of combination of things comes in. Right now, obviously, we're in this new meta where everyone is saying like, we don't have any utility, we're a meme coin. Like Litecoin is saying that they're a meme coin. I saw KLM, the airline, tweeted, I don't know if they get hacked, but they said that we are also a meme coin. So less utility seems more price.
They should tokenize their miles, man. That would be awesome. And then just meme coin miles. There you go.
And I think an extension of that, ultimately, the bigger question is where is the demand coming from, right? Jordi made a great point. It's a lot of these founders, you're looking at a comparable. You think, oh, we are the next big L1, L2. These previously launched at a few billion. Why shouldn't we hit that? Well, who's going to set it? Your VCs have set it pre-launch. There's no one out there but retail after the launch. And right now, the market's not great. And even if it does get better, they have way more options than last cycle. So it's a simple question. Who is going to buy your token and why? And the answer should not be, we have a lot of KOLs who are going to help pump it. Even if that does happen, how long does that last? A few days if you're lucky? But if you're launching a long-term oriented project, you need to make sure your token is being bought. There's demand for this continually, every week, every month, maybe even for years. Unfortunately, there haven't been many good mechanisms to drive that. So you ask deeper questions around tokenomics. Right now, we're still very early stages of people having thoughtful structures around that. But that really is the biggest question. So we highly encourage founders to be conservative. You think about it right now, if there's not much of a financial incentive to hold your token other than staking, then it's about the upside. So you're better off launching low, giving your community, the only people there, the retail, some upside, some reason to buy. Managing your own expectations.
I can take it. I do think there's a way to price stuff. It's just not easy, but you can do it. I'll explain you the principles, but not the numbers. You can underwrite, which means you can do research, so that you know what the VCs did. Sorry, guys, Ravi was very rough. Ravi was super rough.
Hope it was fun.
Yeah, it was fun. The jump from pre-market to market is something that has a premium that you can quantify. How valuable is liquidity for you is something that can be understood from the market dynamics. But everybody agrees that it is a net positive value, correct? Like an asset, same asset, being liquid or not being liquid, it is more valuable. Liquidity as such, it's a value proposition of an asset. It is. Therefore, if you can take float, history of pricing in private, and premium of liquidity considering market, you can actually understand what's the most effective place to position a launch to then have the third point that allows the token to actually be healthy.
Totally. So to jump in more there, my next question would be, a lot of this you're kind of saying, comparables, whatever the case may be, obviously, fundamentals, there's not a lot of fundamentals, especially as we just talked about the meme coins, right? But specifically, you're essentially branding or marketing yourself as a category, right? I'm an L2, I'm an L1, I'm a utility token, I'm a perp dex, et cetera. What are the most expensive categories and interesting categories you think at the moment? And into the future as well.
I mean, everyone has always been expecting the apps to eventually catch up. L1s are still somehow getting that L1 premium as a blockchain. I think it's very optimistic. The L1 premium stems from this idea that you have this base layer and then the potential is limitless because other people will come and build stuff on top and you will be like this valuable layer underneath it. I think for some reason that's still kind of working. There is that premium. Over time it's going down though. And definitely like when it comes to L2s, I think we've realized with Scroll and some of the recent ones that there's less of that aura around it if you're not the settlement layer. So I think right now applications, memes, these categories are getting their moment in the sun. And I was remembering the Matt Wong from Paradigm. He was always saying that crypto is this Trojan horse, and it looks like it's a casino, but on the inside there's a new financial system. So let's just pretend like it's a casino, but we're going to get it through the door, I think what it feels like right now is that it's one level deeper. Like when you look at Inception and you kind of go deeper in the dream, I think it looks like it's a casino that's actually got a new financial system. But inside that, there's just like a casino on crack. There's just like a bigger casino because maybe the core is the casino. And, even Solana says decentralized NASDAQ. Maybe the decentralized Macau or decentralized Vegas is what's in the core.
Well, I'll have to let Eric know because interestingly, the first white paper was decentralized Binance on our end of things as well. So it's a great take.
I would also add anything infra-related may have some premium. So if you look at risk-taking solutions, sometimes they're a bit pricier than other things. But yeah, I would agree with the layer ones. And yeah, up to a few months ago, also layer twos maybe. Yeah.
I'll tell you how you can actually make an assessment here. There are a lot of really cool categories, but the one thing that you can consistently find in this industry is that there is a massive premium for being first. There's a gigantic premium for being first, which means that if you're doing something that has product market fit that is new compared to something that has product market fit that has been proven, your valuation will be a lot higher, even if you have the same revenue, the same amount of users. Like, you have 15 perp dexes coming to the market, and then Pendle's valuation dwarfs them because they create a new financial primitive, gets adopted. Now you start having Pendle little copycats, correct? And they go around, and their valuations are going to be lower than the next financial innovation, maybe rates, maybe whatever it is. And you see that on every single aspect of the industry, correct? This first one that understood that meme coins were going to be valuable. The first NFTs that were a representation of culture, which are the punks. And historically, they're always going to be there. And no matter the category, in every category, in the long term, they're going to trend, but in the short term, they don't. Celestia created a new category and came with a whole new story for modularity. And that made them differentiate from a layer one. And that's really the key. Like, the more you can do that, the clearer will be your capacity to assess multiples. So the relation of multiple would be on that capacity.
I have a lot of respect for that take. I would tweak it slightly. I agree that the category leader just captures multiple 80-90% of everything. Like, you see like EtherFi, you see like a lot of these things kind of once they establish a position. And it's probably because if someone's going to allocate to a category, like you want to invest in RWA or you want to invest in AI, right? You're sort of seeing a lot of liquid funds be lazy and just buy the biggest market cap coin because you're from equities. I mean, in equities, you sort of buy the big market cap one and you're just sort of lazy.
Yeah, it's just it's simple. Especially in this space, there's just too many tokens to look at, right? There's no one can really do much research anyways, so you'll default to the biggest one, the earliest one, the one that people talk about.
But the slight tweak is like, if you're first, you still have to execute well enough that you don't mess up.
You might mess it up, but if the question is multiple, correct? Even you don't need to be that good to get a very good valuation, correct? If you look at Celestia, they make like ridiculously low revenue. It's actually like, if you look at it as independently, objectively, the shit, but they build something new. There's a high expectation. So I think in the long term, if you don't deliver, you'll fail for sure. Yeah. But in the short term, compared to you building something where you deliver, but you took something that it works. You took Uniswap, you forked it, put it somewhere, great community, you made it work. You're gonna, in the long term, succeed. But as you grow, your multiple will stay small. Well, then when you do the opposite, you might die at the end, but your multiple will be very big at the beginning.
I mean, you're definitely convincing me that just being out the door early, you have a really, really good chance. We're seeing some of the coins like XRP, Cardano, all love to Charles and everything, but they're only starting to like show any signs of life when you get like the old school retail that hasn't looked at their app in 5 years. They're re-downloading Coinbase and they're like, oh, I remember this. Yeah. So like this because they were so early. It's not because it makes sense to add 20 billion to their market cap. So that's a very valid point. I guess AI is one category that we're seeing where being early matters a little bit less. There's been a lot of early kind of AI companies over the last few years, and the disruption rate is very high there. We're seeing a lot of new players.
It might just be because AI is not yet a primitive. I mean, it can power other primitives, but it's not yet clear what the primitive
you could say like BitTensor or something like that is the category leader.
Agent things, moving money around,
agents,
for you, creating meme coins. It's pretty cool, huh?
Yeah.
Actually, part of being early, for a lot of these older examples, they launched in a time when, well, people who came in early actually made a lot of money. As in the valuations when they first launched were not like at the billions, right? So you had a lot of regular people who became millionaires and billionaires, and because of that, there's this very strong attachment to it. It holds value to it. For a lot of these newer coins, you don't really have that because most of the people who set that valuation are VCs. They're not really your community. And they will unwind positions wherever they can. So you don't have as many of these people that are sticky, that have been sitting on this coin for a long time and made their wealth from it and are very emotionally committed to it, like the Cardanos. Right? So part of being first, but another angle around that.
Love it, love it. All right, well, I'm going to jump into the next topic. We have a lot of founders here and a lot of folks that are looking to launch tokens. As I look at the slate, there's like literally probably 30, I would say A-tier projects looking to launch tokens, literally this quarter into next. My question for you guys is, the question that we've been prepped on here are there unique token launch strategies that are underutilized? I'm going to get more specific with it, and I'm going to ask you, how much should you pay for exchange listings, assuming you can pay for exchange listings, one, and two, what is the benefit in today's world of DeFi liquidity? Those two things kind of together.
Maybe I can start with the contrarian view. It would be very nice if, this is not legal advice though, if stuff started moving a bit more on chain and potentially even, restarting the ICO type of era. But this is probably a bit trickier on the, legal side. But probably that helps a lot with the community and that may give future advantages.
You need distribution to have your token in front of buyers. We're seeing some launches go well without Binance, so it's possible. Not everybody should be paying whatever this quoted numbers, 10% or something, in different cases, I think. Heard as high as like 15%. If
you can't get Jordi on record here, huh?
Huh?
So we can't get you on record here with any quoted numbers.
I've seen the 15, man. Fucking ridiculous.
There's a range, I guess. I think from what I understand, they see it as a tiering system, and if you're really high tier in their system, maybe it'll be 5% instead of 10%. I am giving the advice to some founders to not pay it right now for some of these big launches you're mentioning. It's a negotiation at the end of the day, and it's gone a little bit overboard. It's interesting from the centralized exchange standpoint, like trying to give advice to centralized exchange. It's still a double-edged sword. They are kind of catering to retail. There is an aspect where they're a serious financial institution that is like an exchange, and then there is an aspect where, like I said, they're a casino, and they understand that. That's where like a lot of their revenue is coming from. So they are maybe like trying to extract money from that process. Not a lot, not all the exchanges. Some of them don't have listing fees. But my personal advice to founders right now is try to negotiate it, get it, at some reasonable number if you can't. We're seeing launches that are still going well, and eventually, at a certain point, you will get a distribution.
There is a cost to market access, right? When you work with a certain exchange, well, it's access to this large community and the reputation, right? You've gotten the seal of approval of some of these top centralized exchanges, and therefore you hope that means your valuation is better. That's the good side of it. Unfortunately, for some of these terms, like your point of negotiating, some of these terms have gotten pretty crazy, such that it can actually speaking to one founder, he quoted his words where he would destroy a project if he agreed to it. You're thinking about it long term, right? It's when you pay that large price, it affects the project long term. For some of the approaches we've seen, well, yeah, you avoid some of those exchanges that have more of these extractive programs, and you try to put it across a broader range of exchanges. There's a cost to that. You're fragmenting liquidity, but you're able to hit a broader base globally. Also, just setting the prices lower to give that room for price discovery, leaving it to you access multiple exchanges that don't cost those fees, and you leave it to the community to set that price. So we're seeing a little bit more of that. There's a general leaning towards fair launch, it's not necessarily going to a launch pad, but the aim here is that instead of letting a few people determine price, go more broadly. Hopefully that adds legitimacy to the project.
Totally. Great answers across the board. So I'm going to switch gears a little bit. Obviously, we've seen a lot of news out of kind of the U.S. political scene over the past couple of weeks, which have obviously led, from my perspective, to a massive push surrounding Bitcoin, right? So we've seen Bitcoin's ATH, just the other day, right? It's crazy. Would love to hear about kind of the liquidity you guys are seeing there for it to move, in my opinion, from 89K to 93K in under an hour was incredible. But I want to talk more specifically surrounding Bitcoin, kind of the ATH, the momentum there, and that impact it has surrounding altcoins. So traditionally, I remember the days where, Bitcoin would move 1%, altcoins going down the list of long tail would go, 3%, you get longer tail, 7%, you get even, more long tail, you're 20%, right? Do we expect in this new bull market to see these similar trends? How does, how do things look as that this market matures, et cetera?
I can take it. It looks so far that it's different. So far, we think it's going to be different. Like the community that is now buying more and more Bitcoin seems to be more institutional. And if you look at the phenomenon of meme coins, these people are not buying BTC. They're definitely not. Like they're not. And you have like this fight between this idea of projects that are venture backed, and that the little guy has to fight the big guy, and that has made a split where, like you said, correct, like majority of people in the world are just trying to find a way to get out of their financial situation, and they see the low cap assets as that. Well, now we have a divide of a lot of people that made a lot of money that have shifted their mind to capital preservation. A lot of the people that were maybe degens in the first years of crypto are now a community that is very sticky around the very traditional stuff and doesn't want to touch anything, because they actually themselves, even though they became rich by acting that way, they're now just trying to think, how do I just make sure that I stay at the top?
I broadly agree. I think if you think about matchmaking, and you have one side, like let's say like the guys are the asset allocators and the girls are the tokens, and they have to kind of like, see who's matched for each other, right? It's a little bit different this cycle. So I agree that the Bitcoin buyers are the serious, institutional players for sure, definitely. Maybe nation states, they're telling us there's some top 5 buyer in the Middle East countries or something. Some
KOLs.
KOL alpha.
No, KOLs are matchmaked with. You have like some VCs that want to do venture and they're comfortable with that, and that's maybe like some of the altcoin buys are still coming from, and then you have retail, and like you said, a lot of them are looking to get rich, and Bitcoin going from 80 to 120K is not going to do that for them.
Like whatever.
So they're looking at what we're seeing being assets that can give the impression of being a lottery or give the impression of being like these sort of lottery-like returns. And they're being matched against things that are very simple, dumb to understand. If it's like a 50 IQ play, there's no barrier to entry because it's just a dog or it's a cat or it's a hippo now, apparently. Like this.
Dang, we're in the land here.
Squirrel, it's a whole zoo kind of thing. So, I mean, it takes people back to like the most basic primitive, I guess, which is just there's a story. There's a story that's just a picture or it's just a name, squirrel, like peanut or something. I don't think it's sustainable because the reason right now, I think what we're seeing this is collectively we're figuring out like where does the value lie. And there's an impression that there is something called PvE. So PvP is like player versus player. One's long, one's short, that's the game. And with meme coins, some people think it's player versus everybody. And everybody can win because we're going to create a new asset. And we've seen kind of glimpses with Dogecoin where it's sort of sustained at multi-billions and sort of creates that. But not everything can last as a PvE, and I don't think it's too sustainable.
You should think about where we are in the adoption curve for crypto. In the last cycle, yes, you saw a lot of movement into altcoins because those early adopters had that risk appetite. Had that you make your gains on Bitcoin, you rotate. So those have been in the space, and you haven't seen much new liquidity outside of institutions. But the next people that you you could have them adopt are not going to have the same kind of risk tolerance. So Bitcoin is like a gateway for them too, but their willingness to go down the risk curve or along the risk curve is going to be a lot lower. So maybe they'll add some Solana. Maybe they'll add a few more of these blue chip sort of names. But are they going to go into the next new narrative? They have no idea what that narrative even means. I'm not saying that new altcoins aren't going to attract some new liquidity, but not to the degree that we've seen in the past. So I think just where we are in the stage of the cycle, the nature of the existing liquidity that hasn't gone in yet, how that behaves. So.
Totally. I agree, and I'm surprised I didn't hear about the Coinbase 50, this new indice that just came out this past week. I'm super interested personally of kind of where that kind of takes us. But you brought up kind of a great segue into something that I want to talk about next, and that's really how much does speculation versus product market fit really matter? And I would love to hear from your guys' perspective, right? You really have, the token as a product and your actual product as a product, right? And I would love for you guys to break down, those two specific segments to give us a better understanding in terms of how you advise founders that are coming to market on what the most important things are in terms of education for launch and how you see the market today. Are we getting more mature, less mature, et cetera? I think Athena might be a great example, as well.
Well, I think I think about cycles, in terms of technology. At the early stage of any new technology, it's all pure speculation because there's not much actual use cases. You're not solving a tangible problem. It's like with most of these, but you're aping in because you're hoping that everyone else is going to come in. But later on, as you have all this capital coming in and you have more innovation, you have the discovery, figuring out what problems can be solved. Then there's a bit more product market fit, but it's still super early. The best use case we've seen so far is stablecoins. That actually solves a very meaningful problem, especially for people who don't have access to dollars. It's very valuable. Hence, we see why RWAs are so big now. But as we move along the stage of the development, the use cases, the value that actually people can get out of it, utility. We talked in the last panel. We talk about utility, but it's a very loosely used word. Well, is it going to be, for a regular person to adopt, are you going to make more money off of it? Not just from the speculation, but some sort of yield. Or is it going to solve a problem that applies to your day-to-day? Well, with stablecoins, it does do that for a lot of people. That's something that inevitably has to happen. So for us, we tend to focus on founders who actually usually come from a Web 2 background because they know what it means to start a business. They know what it means to solve a problem for consumers, which we've seen less of in the earlier cycles, but still early.
I completely disagree, and I don't know what you guys' take is. I think we've gone through a cycle recently where most of the founders have become a little bit exasperated because they've been building with this cool tech. It's very complicated, and it's all these layers and all this stuff. And then after doing this for years, they realize it's not that we're early and that the product market fit is coming and whatever. Like I said, it's sort of the product market fit is mainly speculation. That's the casino. It's the bigger game. You're giving people entertainment that they want. That's sort of very large. And then you have glimpses of other stuff. I think AI is potentially going to be something that will have some use case. We've seen something like Grass, allows potential AI agents to access the internet in certain ways. That type of category will create some utility. But for most of what we've been building for the last 5 years, a lot of it is just it's like your uncle in the garage with the big hair and he's just trying to experiment with some stuff. But I don't think that the concept that the product market fit is going to come from that is clear. And when you see a dog coin exceeding your market cap by 100x with no effort, just because some people pushed it, that's an indication that there's not enough product market fit. And then the financial nihilism kicks in, right? So, and I'm curious your guys' take.
Unfortunately, the data supports your case because, when you look at just the numbers, even though we think, okay, we're advancing, there's more product market fit, whatever it is, the reality of it is the only thing with real product market fit in this industry is DeFi, because it's the only thing that makes sense, because you use the stable coins to generate financial services, is the single lowest multiple asset in the whole fucking industry. So the thing that works is the one that is valued the least compared to its value. And what that tells me is that, unfortunately, the thing that works the most today is to purposely make your product very hard to understand. It's true.
You want to make it intersubjective.
Yeah,
Intersubjective truths.
I've met some of these guys that deep down they know it's true and they just make like a million words and things and they don't want people to really understand. Once they're listed, before they really try very hard, and then once they're listed, make it very abstract, so that you get categorized more and more as we're gonna change the world in 20 years. Just wait for it.
I think in terms of the nature of the space, you're right. Vast majority of what we see is shit. As in, it's not actually creating. It's not searching for product market
It's true,
fit.
but if it was the case, then you would have the DeFi protocols just growing slowly in value, and everything else just really quickly crashing. And instead of that, we had basically the last 12 months where there were DeFi protocols that their market cap was lower than their treasury across the board. That's how ridiculous it is.
On the DeFi protocols, we've seen a few times over the last year, there is a belief that we're going to get these better regulation that will allow us to unlock the cash flow. Unlock the cash flow. The token will not be a governance token. It will get cash flow. And we get these pumps, of course, in Uniswap, but then other similar tokens. It becomes pretty clear if you look at the actual amount of money that can be passed through in most cases. There's a couple exceptions, but in most cases, it should make you more bearish on the asset, not more bullish, because being pre-revenue, you're kind of able to get by. But as soon as you realize, oh, okay, so it's just going to be 100 ETH a month for the whole protocol. The P ratio is still going to be very high. That doesn't seem to last. It's not big enough yet, I would say.
But do you think that when that will change, will it affect actually price? Because Ethereum was somewhat deflationary, which makes it a bit attractive, but that didn't really influence price for that long, right? And then you have a macro environment changing, and stuff gets better price-wise.
Yeah, it's so funny with Ethereum. I did expect, one of my wrong theses this year was that the deflation of Ethereum would kind of kick in a banana zone like we've seen with Bitcoin, and it hasn't.
The year is not over.
Not. I love the optimism. All right, we're gonna. That ETH BTC chart that is dying will kind of we'll see. So, and meanwhile, Solana, which has constant unlocks, it's a VC coin, for years and years, has done tremendously well. So, I think there are more dynamics at play than just these things. Ultimately, with looking at the future and where we go from here, you have to believe that at some point the tokens that run out of supply will be able to sustain in the long run. And we're seeing some of the last cycle ones that have everything emitted, like Pendle you mentioned, Aave as well. There's no overhangs at that point, and as long as the team is still building on it, it can do well.
Couldn't agree more. So I want to double tap on that a little bit, right? We have a ton of founders with us today across the ecosystem, and let's say you are a potential founder of one of these projects, right? On the venture side, how do you guys as market makers that see everything across, the kind of market specifically, whether those are tokens being dumped by foundations or by, different forms of venture firms, et cetera, kind of, letting you guys into what's happening on the back end, what do you recommend on the venture side in terms of, a proper fundraise? Are you, pre-token trying to raise as much as possible, right? One, or two, and get as much cash in the door as possible, or is it make the best deals at, the lowest valuations as possible? Kind of what is your advice to founders on that end, seeing kind of market dynamics today?
You don't want your investors to be underwater, especially if you're expecting any help from them at all, apart from just the cash. And if it's just the cash, fine, then try to squeeze as much cash out of it as possible. If all you need is cash. But we've seen obviously cases where the private round ends up being really expensive compared to even the launch. And that will kill your project. I mean, nobody wants to help you if you've kind of weaseled them into a really expensive round. At that point, they're just going to sort of like write off their losses. So my advice to founders is try to like get up the steps properly. If you can get high signal or high value add investors along the way, don't be trying to like extract a super high price. And we're seeing things like, Binance Labs, some of these entities are able to always invest at, I think they invest at like sub 50 million. So obviously, they're adding value in some ways, you could say. But the right thing to do for founders right now, I think, is get the right supporters, get enough capital so you can launch. And I have no problem with founders OTCing after the launch or the foundation trying to get more working cash. I think that's part of the game. Everybody does that.
On the venture side, I think that it's important to realize that the last 12 months, basically until 2 weeks ago, it was very hard to raise for early stage, like super hard. Like for these guys, it was not a situation of like luxury. Like we're now going back to rounds that are oversubscribed. Like in the last couple of weeks, people trying to ask for ridiculous valuations. They're trying to be opportunistic, which fair enough, like I said, it's the game and we need to accept that. But understanding the market cycle for me is what's super critical. And like as a founder, like reading the market cycle wrong basically makes you go and pitch something that doesn't fit, and then you spend ages trying to raise money instead of focusing on your product. So for me, it's not so much about how much money you raise or how much you give away and what valuation you use, but like sell something that fits in the cycle fast so that you can just focus on the product next. I think what kills them is fucking 8 months, 10, 12 months trying to just raise a fucking little round and then like, just not building anything sucks.
Well, the question is, what is the purpose of the raise? Do you necessarily even need the money? And a common complaint among founders is you find VCs, they cut you a check, but then there's no help afterwards. Did you even really need the money, or more was about leveraging the network and brand and resources of the various investors? I think being more strategic around that, right? It's the cadence of how you raise, as Jordi mentioned, right? It's that no one ever wants to be underwater, so you don't necessarily need to have very high rounds. It's actually giving you the space to, steadily have an up over time, such that even when you launch, there's still a lot of upside for everybody.
Totally. Good stuff. Okay, well, we only have 3 minutes left. I want to go around the horn and get the take for a lot of the different builders in here today. I'm very kind of saddened that you guys have been very bearish on product and very bullish on speculation. And
I'm actually very bullish on product, but
I love to hear it. No, I love to hear it. Right, we're big believers, at the Injective Lab side on that as well. But what I would love to hear. You're a founder building and focusing on product and trying to build something revolutionary. Given that you have these two different pieces of the business, what is your final kind of parting advice that you would give to a founder in today's market? We'll start with you, Will.
I feel like I'm the optimist on this panel, but I think it goes back to basics. And maybe this is because I'm biased. I've only been in crypto, for full transparency, 11 months. I spent over a decade in TradFi. It's helping investors, mostly on the quant side. But anyway, it's a business. So for me, at the end of the day, it's if someone's going to buy your product, first it's buy your token, but then it's using your token and being part of your ecosystem. All of that requires some level of utility, and I say utility, it's not some fuzzy word. There's some meaningful benefit here. So I think we've gotten to a point where you can either you're at two ends of the spectrum. You're either going to be a pure meme, pure speculation. That's fine. Be transparent about it, and you can do well. But if you're not going to do that, Well, focus more on fundamentals, but do not ignore the aspect of crypto. But marketing is so much heavier. We tend to find ourselves working with a lot of, I mentioned earlier, more Web 2 founders, people often in the deep in the space. Their usual question is, well, we know how to make money for our investors, for ourselves, but we do not understand how to navigate this space. We do not know what is a community. Well, that's an area that they'll need a lot more help. It's otherwise, it doesn't matter how profitable your business is, you won't get the adoption. So for the people here who actually care about product, who actually have a long-term plan to make money, sell something that's valuable, understand that in Web3, you need to be able to connect with an audience that you probably haven't connected with before. But you have a lot of help here in this room.
So I'm not bearish product. I think you can build product that helps speculation, right? So there's different chains, there are different ways to buy and sell tokens. The user experience is still not great, especially for DeFi. We want that user experience to be a lot better. Some of the categories that I'm excited about is, for example, like these account abstracted wallets. We're seeing a bunch of them, Infinex, Azura, like a lot of these things. I think they're looking at it properly, which is, I'm a user, I want to have a really good experience. Very simple, intuitive, Moonshot, I think, for meme coins, it's very simple. I saw a friend of mine use it. I was like, wow, it's just one green buy button and a chart. That's it. Like, you just click that and you buy. So, like, I like that category. I like, for the complicated stuff that is like a 8-page white paper, there's some stuff that's still good. I'm seeing, like, the fragmentation of liquidity between different chains. There's ton wallet users that want to trade some meme coin somewhere else, and it's so clunky, it's awful right now. There's some people doing some, L1s or L2s that will find ways to just unify liquidity or make it smooth. There's a lot of things to do. So I'm not bearish product. We're investing heavily in product. I think just as a founder, make sure that what you're focusing on will make the user experience better. Like, just make the UX better. That's it. It's still not good.
On my side, I would suggest exploring some niches could be interesting. In particular, shout out to Elix for exploring a bit on the matching engine side, applying something which is called frequent batch auction, which is underexplored even on TradFi.
I'll give you a different view here. I think the advice is to not take the shortcut. It's so appealing to take the shortcut now. There are 3 shortcuts. And everybody, all the founders are trying to take them. Shortcut 1, taking money marrying yourself for money. Taking money from a foundation, not because you actually think the community of the technology is good for you. You're just taking the money, correct? Marrying yourself. Wrong. You shouldn't be doing that. Not building your product, but building a token. Meaning, thinking your product is a token. In the short term, might fly, but it also, it doesn't really work. And I think ultimately, like, taking money from people that don't understand what you're building. It's just, so easy to fall into those traps, and then you lose 12 months, you lose 18 months, you don't know where you're going. And if you avoid that, this industry is very generous, actually. It's a very generous industry, you'll do fine.
Incredible stuff. Well, with that, we will wrap it up. I wish we could go on forever, but I appreciate you guys so much for coming out to the first ever Injective Summit and sharing your thoughts with this incredible group here. So again, thanks for joining us, and we're on to the next panel.
Cheers.